Hello and welcome to The Quality Investor. With earnings season winding down, there are still a handful of businesses still releasing their Q3 results. After the bell yesterday, Ulta Beauty, ticker ULTA, released their results. Ulta is one of my favorite businesses. Ulta has grown its revenue every single year since 2005, with the lone exception being 2021, the COVID year, when every retail business literally closed their doors for an entire year. Likewise, earnings per share has grown every single year since 2005, with the two exceptions being 2009 and 2021. 2009, of course, was the year of the global financial crisis following what happened in late 2008. So, Ulta is a compounding machine, and they continue to grow and expand their business, opening 12 new stores in just Q3 2023 alone, and compared with 7 net the rest of 2023. They are accelerating their growth now in the second half of the fiscal year. However, they are a bit behind their numbers for earnings per share and free cash flow this year, which can be attributable to the high inflation environment that we're currently in, as well as the general economic slowdown of 2023. However, Ulta has shown themselves to be very resistant to economic downturns, having grown their customer loyalty base to a record 42.2 million in this quarter. One downside, though, in the earnings released this quarter has been their cash flow. Their total cash has been declining since Ulta is pursuing their aggressive growth strategy of total new store opens of 1,700. In 2023, their capital expenditures focused not only on new store openings, but on relocating existing stores as well as remodeling some stores as well. They've also had a large cash spend on building inventories for the upcoming holiday season. And if sales for Black Friday and Cyber Monday are any indication, it should be a big season. After reviewing their earnings report, my conviction in Ulta Beauty remains very strong. My investment thesis is as follows. Point 1. Ulta is the largest beauty retail in the United States and continues executing a growth strategy of new stores, expanding margins with their leverage over suppliers, increasing their online presence, and remaining committed to their loyal customer base. Point 2. Ulta operates in the beauty space, which has proven to be resilient to both recessionary and inflationary pressures. Customers like the in-store experience because beauty products have an intimacy with their customers due to the in-store sampling and comparing. Point 3. Ulta has an in-house beauty salon, which differentiates it from its main competitor, Sephora. Point 4. Ulta has an incredible share buyback program, which rewards shareholders. They have taken advantage of the share price decline nicely in 2023. And finally, Ulta shoppers love to go to social media like X and brag about how much money they spend on an Ulta trip. I love brands that make customers feel good about spending money. All right, let's get into the earnings. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, hit that notification bell so you can know right away when I post more stock analysis content. So here we are on Ulta Beauty's stock price. So basically, they closed yesterday at $425.99, and they released their earnings post-market. So we can see that the pre-market today on Friday morning, they're up an astonishing 11.27%. We'll see if that holds throughout the day. However, you can see that just huge bump this morning in after-market trading and their share price because of their really good earnings release. And coming over to their press release itself, we can see some highlights for the third quarter. You can see the net sales have increased 6.4% to $2.5 billion compared to $2.3 billion in the previous fiscal year quarter. And we can also see the comparable sales, stores for open at least 14 months, and e-commerce sales have increased 4.5% compared to an increase of 14.6% last year. It's a little bit down this year due to what I mentioned earlier, the economic conditions. However, retail really measures themselves by comp stores increasing their sales, and we're seeing that yet again out of Ulta. One other thing I do want to mention here that's a little bit on the negative side. So as you can see that the gross profit in total increased 3% year over year. However, as a margin, the gross profit has decreased to 39.9% compared to 41.2% a year ago. Seeing declining margins is not necessarily a good thing, and the reason for it is even a little bit more concerning. You can see here they mentioned higher inventory shrink, meaning theft basically. So, and also higher supply chain costs, which is probably due to the inflation. So hopefully in 2024 they can turn this gross margin stuff around here, getting back into a growing state, and we can see as they open more stores, they should do better at their operating efficiencies, and hopefully they can really solve this shrink problem. That's never a good thing to see in an earnings release. We're here looking at the income statement itself, and you can see the nice growth in the sales numbers year over year here. So the 2.488 billion versus the 2.338 billion last year. However, you can also see that those costs have increased a little bit, which have resulted in a lower earnings per share. So $5.07 this quarter compared to $5.34 a year ago. And that's primarily driven by a little bit by the higher supply costs, like I already mentioned, as well as some higher overhead in the SG&A section of the income statement at 661 million versus 597 million last year. And one other thing that we can see here is results of that nice share buyback program. You can see that their shares outstanding has decreased by over 2 million shares this year alone. And looking here at the cash flow statement, we can see that they have generated less cash this year than they have last year to date, 896 million versus 901 million last year. And you can see that big inventory spend, 717 million so far this year in the holiday buildup, as well compared to last year at 615 million in cash spend. And you can also see that capital expenditures, 311 million versus 203 million year to date last year. All those new store openings and remodels and such are having an effect on their cash flows. However, one thing I do want to point out is you can see repurchase of common shares, 840.5 million compared to 571 million year to date last year, a result of that share price decline that we've seen this year. And Ulta has really taken advantage of that decline, really rewarding their shareholders with large purchases of shares. And here we can see why we're seeing a big bump pre-market for Ulta shares. They did update their fiscal 2023 outlook and raised their guidance. So now they're expecting on the low end net sales of 11.10 billion versus 11.05 billion, as well as updating their comparable sales year over year increase to 5% on the low end. They're also expecting a slightly higher earnings per share on the low end of their guidance at $25.20, and spending $50 million more on share repurchases than they were previously expecting, as well as lowering what their total capex is expected to be by about 50 million to 425 million. So all of those combined have given Ulta that pre-market bump, because all of these are very positive for shareholders. So here we are in my updated valuation for Ulta Beauty. I updated this with numbers based on management's updated guidance. We can see, before I get into that, we can see that they've done an incredible job with their profitability here. Gross and operating margins are well above their 5 and 10 year averages, as well as the return on invested capital and return on capital employed, both doing excellent numbers. And their PE ratio is also well below their 5 and 10 year averages, and their forward PE of 15.6 is far, far below their 5 and 10 year average. So Ulta Beauty still looks pretty undervalued. And once I plugged in those numbers, I got a new discounted cash flow of $601.32. And for the exit multiple valuation, $548.24 when compared with their peers. That comes to a valuation average of $582.74, 36.8% potential upside, an incredible upside. I also decreased my margin of safety from 20% to 15%, given Ulta's very strong results and the resiliency they have shown over the last few years. That gives us an acceptable buy price of $495.33. They are still trading well off their 52-week high here of $551.43, which you can see that they achieved earlier in the year, around March and April. And looking at their 1 year share, we can see that they are still below where they were a year ago. So there's still a lot of opportunity in Ulta if you want to pick up some shares today. All in all, it was a very strong quarter for Ulta Beauty, and I'm pleased to share with them in that growth. So before we go, I do want to emphasize that this is not financial advice, and I do own a stake in Ulta Beauty. With that, thank you for watching today's video. And what do you think? I love the feedback, so please comment below with your thoughts. Also, please hit that like button. And if you found this info helpful, please subscribe to the channel and join our community. Thank you, and happy investing.